Assalamualaikum, my name is Nick Salahuddin bin Mansur and my magic number is 2020489848.
Hi, my name is Nur Fariza and I will be presenting question D and question E.
Hi, my name is Ahmad Syafiq bin Zainal Abidin. My matrix number is 2020853844.
Hi, Assalamualaikum warahmatullahi wabarakatuh. My name is Siti Maisarah binti Zakaria and my student ID is 2020 60 17 and 32.
Assalamualaikum and hi, my name is Nurul Izzah binti Ismail and my matric number is 2020-878716.
Before we start, let me explain what is the company's background. Kuala Lumpur Kepong Berhad, KLK, today started as a plantation company in 19, and it is listed on the main market of Bursa Malaysia Securities Berhad. As one of the end of September 2021, the company has a market capitalization of approximately RM21.687 billion. The development of oil palm and rubber remains the group's core business. KLK presently has about 300,000 hectares of planted area for both crops.
Now moving on to the next part, which is MFRS 8 segmental reporting. Firstly, we need to identify the operating segment of KLK Berhad. Based on annual report of the company, KLK Berhad has 5 operating segments, which are plantation, manufacturing, property development, investment holding, and others. As stated in MFRS 8 operating segment, an operating segment is a component of an entity that engages in business activities which incur an expenses or earns revenue. Secondly, whose activities are regularly reviewed by the CODM, Chief Operating Decision Maker, for assessing performance and resource allocation. And lastly, for which discrete financial information is available. Operating segments are only required to be reportable if they exceed 10% quantitative threshold test. For reporting purpose, a reportable segment is one that meets any one of the following quantitative thresholds, which are revenue, profit or loss, and assets. In KLK Berhad case, we choose to do 10% quantitative threshold test on segment's asset. The next step is 75% constraint on revenue basis. After initial identification, we need to determine whether the total external revenue reported by the operating segments constitutes of 75% of the entity's total revenue. Now, moving on to the next part, which is segment information, which consists of plantation, manufacturing, investment holding, property development, and others, which amounted to 20,520,000,044 ringgit. After completing 10% threshold test, we can conclude that there are 3 reportable segments, which are plantation at 34.36%, manufacturing at 33.07%, and investment holding at 22.03%, while there are 2 non-reportable segments, which are property development at 7.96% and others at 2.61%. Now, moving on to the next part, which is 75% rule, where we need to ensure that the total external revenue attributable to those reportable segments is at least 75% of the entity's total revenue. We need to divide the total revenue of reportable segments with the entity's total revenue and times with 100%, which amounted to 98.46%. From here, we can conclude that KLK Berhad has 3 reportable segments and 2 non-reportable segments.
As per calculation in the revenue basis, the new segmental report are as in the table shown, which comprises of 3 reportable segments that are plantation, manufacturing, and investment holding. And there is 1 non-reportable, which is property development, reported along with others. Property development will be reported as non-reportable along with others as it fails to meet the 10% threshold test requirement. And since the 75% test has been satisfied by KLK Berhad of 98.46%, KLK Berhad may simply ignore the property development and others. Next is the advantages of segment reporting. First is separating profitable segments. Transparency is a major benefit of segment reporting. Segment reporting can disclose which sectors are profitable and which are drains on the bottom line for KLK Berhad, which operates in a variety of industries. If segment reporting reveals that a company's international operations are more profitable than its local operations, it may induce a strategic shift. It prevents management from concealing unprofitable businesses if done correctly. Next advantage is improved context. Segment reporting also enables stakeholders to gain a better understanding of volatility that may occur in overall data. If KLK Berhad produces significantly larger earnings than projected, segment reporting will identify where those earnings are coming from. The same report can be used by stakeholders to judge whether the numbers are sustainable. It's intended to aid investors in acquiring a better understanding of the company and its future cash flow. What about the disadvantages of segment reporting? The first one is emphasize on the present. Short-term numbers can be overemphasized in segment reporting. For an example, a company may establish a separate division for its online activity. Before the proper people and infrastructure are in place, that division may experience a huge loss. If the company's overall profitability outweighs this loss, they may not be reflected in the financial accounts. Breaking out those numbers as a data point through segment reporting, on the other hand, can put pressure on the company to lower those losses in order to boost short-term earnings. And the last one is data manipulation. If the information is presented in the true management eyes format, segment reporting lends itself to data manipulation. This gives company leaders more leeway in determining how segments are built and what metrics are reported. Managers may group businesses with different business models together. It can also pick and choose which metrics to present to stakeholders in order to send the desired message. To sketch a more accurate pictures of performance, losses in an internet division, for example, could be combined with profits from an unrelated profitable business units. That is all for the segment reporting. We will continue with the discussion of the interim reporting.
For Part B, Question A, the basis of preparation of the interim report of KLK Berhad is discrete method. It is treated as an accounting period distinct from the annual cycle, and it is prepared based on periodic basis. The financial statement of group have been prepared in accordance with MFRS, Malaysian Financial Reporting Standards, International Financial Reporting Standard IFRS, and the provisions of Companies Act 2016 in Malaysia. These financial statements also comply with the applicable disclosure provision of listing requirement of Bursa Malaysia Security Berhad. The accounting policies adopted are consistent with those of the previous financial year, except for the effect of adoption of new MFRS during the financial year. Next, for Question B, accounting policies used in preparing the interim report of KLK Berhad. First is MFRS 116, which is Property, Plant and Equipment, PPE. PPE are tangible assets that are held for use in the production or supply of goods or services, for rental to others, for administrative purpose, and are expected to be used during more than one period. Next is MFRS 141, Agriculture. Agriculture is applicable to biological assets, except for berry plants, agricultural produce at the point of harvest, and government grants related to biological assets. For Part C, types of interim reports prepared by KLK Berhad. The directors of KLK Berhad have pleasure in submitting their reports together with the audited financial statements of the group and of the company for the financial year ended 30th September 2021. It contains statement of profit or loss, statement of other comprehensive income, statement of financial position, statement of change in equity, and statement of cash flows.
For cumulative, the interim report is from 1st January 2021 to 30th September 2021, and its comparative is from 1st January 2020 to 30 September 2020. Other than that, the company also prepared the statement of changes in equity with its current interim report from 1st January 2021 to 30 September 2021, and its comparative is from 1st January 2020 to 30 September 2020. Lastly is the statement of cash flow. The company prepared its interim report at 1st January 2021 till 30 September 2021, with its comparative statement from 1st January 2020 and 30 September 2020. For the last question adjustment made by the company to be included in the interim report, as you can see, this is an extract of the statement of financial position showing before the adjustment. On 1st October 2020, the company's property, plant and equipment is worth 1,201,000. The accumulated depreciation is 124,876,000. On 1st April 2021, the group acquired machine spares with a cost of 1,530,000. With the accumulated depreciation, all of its motor vehicle using straight line basis over 10 years estimated useful life and none in the year of disposal. On 31st October 2021, KLK Group decided to dispose one of its equipment with carrying amount of 67.8 million, bringing it for a profit of 23.4 million, bringing the machine was initially purchased at a cost of 72.1 million. For a second adjustment, on the 1st of October 2020, KLK had an open inventory of 157,533,000. On 30th September, the companies had inventories of 150 million at a cost per unit of RM1.50, which brings a total of 225 million. The net realizable value is RM1.25 per unit. That brings a total of 187,500,000. Therefore, the value of the inventory should be recognized at the lower of its cost, and NVR it should be recognized at 187,500,000. The difference between the cost and the NVR is 37,500,000 should be recognized in the SOPL as loss. So, this is the extract of the statement of financial position after the adjustment. You can see under the current interim report that the PPE now have a carrying amount of 2,658,900,000 and the inventories is now 187,500,000.